Okay, here's your notes on insurance. Make sure you put your name, date, period up top. If you are doing this on paper, make sure that you have columns where you put the topic on the left, details on the right, and make sure that you line them up so that the topic matches up with the details. Okay, so I listed several types of insurance here. Auto, you're familiar with. Vision, that's, eye exams and glasses and contacts and stuff. Disability insurance is insuring against you becoming disabled and unable to work and provide for yourself. Medical, I guess you guys know that, going to the doctor, hospital, surgeries and stuff. Life insurance is if you buy a life insurance policy, you are insuring your own life. It's not going to protect you against dying, but what it provides for is money for those you are leaving behind that you were providing for. A lot of times parents or a parent will buy life insurance in case they pass away, then there's money for their children to live on or their spouse that they left behind or whatever. Homeowners is just exactly what it sounds like. If you own a home, you want to have insurance, if your house burns down, whatever. Dental insurance, exactly, cleanings, filling stuff. Most business owners have some sort of insurance because they have assets and buildings and stuff. And then renter's insurance, again, exactly what it sounds like. But if you're a renter, you're renting an apartment or a house or something, the home owner is going to insure the actual building, but the stuff inside that condo or apartment that belongs to you, the renter, is not insured. So if you're renting a place, you probably want to buy some renter's insurance. So if something happens, you can get paid back for your belongings. There's lots of other kinds. There's crazy insurances, but these are the most common ones that people are familiar with. Okay, so the next word is the parties. And it has nothing to do with a party like woohoo. It has to do with the players who, that sounds funny, the players. It has to do with who's involved between you and the insurance company. So the insurer, they are the company that's providing the actual insurance, and they are providing the insurance. In other words, they're giving you coverage. That if it was an automobile insurer, that would be like Geico or Progressive or Allstate or State Farm, one of those kind of joints. The insured, that's you and me. That is the person being insured or covered by insurance. So look at the suffix. The insurer, they're the ones doing the insurance. They're the ones doing the protection. The insured are the ones that receive the protection of the insurance. Okay, so the next word is coverage, and that's kind of, again, what it sounds like. It's what's covered in your policy, and your policy is the agreement between the insurer and the insured and how much is covered. So obviously, the more you pay for your insurance, the more coverage you're going to get. So that is something you agree to before you need to make a claim. Okay, terms. Terms are what is the agreement between the insured and the insurer. So when you sign up for a policy, whatever type of policy it is from these types up here, you guys have to come to an agreement on how much premium you're going to pay, and how much is going to be covered, and what's the deductible, etc. All that stuff is outlined in your policy, and all that stuff needs to be decided ahead of time. If it's auto insurance, you have to come to agreement on terms before you have an accident. If you try to do it after, you can't unring that bell. Okay, the next word is premium. Premium is what you have to pay. Get it? Premium is what you pay, and that's the cost of insurance. Now, a lot of people pay it on a monthly basis. You can pay it quarterly, semi-annually, annually. I pay mine annually just because to get it out of the way, I don't have to think about it again until a year later. But here's the thing with a premium. You got to pay it before you have an incident that you need coverage. And even if you don't use your insurance, you have to pay it and you don't get it back. You pay your premium whether you use the insurance or not. It's not refundable if you don't use the insurance. Now, insurance is known as risk management. So the riskier the situation, the higher the premiums. And that's a direct relationship. A lot of you guys learned that with me freshman year. So the higher risk someone is, the higher their premiums. Notice the arrows go in the same direction. The same would be true if someone was low risk. Lower risk would have lower premiums. And that's true for all the kinds of insurance, not just drivers. Someone who is elderly and already has a pre-existing condition, cancer or diabetes or something, they're going to be a lot more expensive to insure. They're going to have much higher premiums because they are higher risk. They are more likely to need medical care than someone who's 20 and super healthy. So as far as drivers go, the riskiest group is males age 16 to 25. Again, it's nothing personal, gentlemen. It's just statistically, males in that age range have statistically caused more accidents than any other group.